Let's split this up into three buckets, right? You would look at it, one from the perspective of the investor, two from the perspective of the AMC, and three from the perspective of the broker. Can you explain the implications for each of these three cohorts?
And good morning, Alex. I'll add another vertical to that. That's a distributor. And what's the impact on each of them? So I personally think from an investor standpoint and a distributor standpoint, the cleanliness of TER computation was very critical. So I think that it's a 10 on 10 with respect to computation and transparency. There was always no intent issue with AMCs. Those are the most regulated entities managing any third party money with fiduciary responsibility. If as an investor, if I don't trust mutual funds for regulatory purposes, then I don't think I should invest anywhere other than leave my money under the bed or the mattress. So it's so well regulated. Having said which, there was still a difficulty for a distributor or a client to understand the statutory levies because those are variable costs. If there is one fund with a larger churn that could have different brokerages, different STTs, different exchange costs than another fund which is more static. So if that was jumbled up with a total expense ratio, earlier in the industry, we had another concept called distributable TER. DTER, we used to call it, total and distributable, minus the expenses. It was very difficult for us to decipher what was the distributable TER. So with respect to making it clean, nothing better. Transparent, very, very good. For AMC, I think it's also one step forward. Marginal short-term hit. I think the markets had already provisioned the larger hits. For AMC shareholders, it's a very good thing because we're still 2% of US mutual fund industry. That's a 3,500 lakh crore in rupee terms. We are just 70 lakh crores thereabouts. So it's just 2% of US mutual fund industry. So for an AMC, it's good. From a distributor standpoint, there is a little hit of 3-4 bips or 2-3% for distributors like us in terms of expense ratio, but that's not a large hit either to the AMC shareholder or the distributor shareholder if he is a owner.